Connect with Sanjeev Asthana. He's the CEO at Patanjali Foods, here to talk a little bit about what the implications could be if the government were to raise the import tax on palm oil, as well as what their own financials are. Thank you so much for taking time out. Given the fact, Mr. Asthana, that we've seen global commodity edible oil prices seeing a correction and imports increasing, we understand the government is looking to increase the import tax on palm oil. Will this step be enough for farmers and producers?
So there are two parts to the question that I'd like to answer with. One is in terms of the increase in the duty structure. That's very much a prerogative of the government. They have to look at the pricing, how it is headed, and because the impact is larger. The second issue is that, how does it impact, the companies and the farmers in the country? There, I would say that the prices recently in the oilseeds have sort of started looking downwards. Especially, we've got mustard oil, mustard seed prices, which have started coming off, and they are ruling at some mandis below the MSP prices also. So that might be a source of concern to sort of look at increasing the duties. But having said all of that, I think as far as the companies are concerned, for them it's a pretty much a pass-through, model. So to us, it doesn't impact. If at all, it might be partially beneficial for the industry. And certainly, as a pro-farmer sort of interest, it would be worthwhile for the government to explore that for certainly.
Right. You also have the largest palm oil plantation in the entire country. What is the growth that you've seen here in the last year? And what then is your strategy when it comes specifically to palm oil going forward?
So our strategy is very clear. What we have committed to the government is that under the National Mission on Edible Oils, Oil Palm, the government has a 5-year project. We have committed to the government that we'll do 500,000 hectares of plantation. And so the momentum has started picking up. This year, our expectation is that we should do anywhere between 40 to 50,000 hectares in 23-24. Year after, we'll do about 125 to 150,000 hectares. And our focus geographies are basically 4 states in Northeast and 3 states in southern part of the country. And we are pretty convinced that we should be able to achieve all those objectives.
So quite optimistic with respect to the expansion of the palm oil presence in the country as well. But Mr. Asthana, the raw material prices have been fairly volatile, and so have been the prices when it comes to palm oil or even wheat, for instance, which has seen a bit of a spike of late. What does this mean with respect to your margins and profitability? How are you defending those?
So our, after the sudden drop, which happened in the second quarter, which impacted across the board all the global companies, our margins should be very positive. Last quarter itself, we did exceedingly well. And this quarter also, we're expecting to show in good results. We hedge normally all the risks that we carry in the books. And any sort of increase in the prices or duty increase should be beneficial to players like us, who typically tend to carry large inventory, when we purchase. And if any duty is announced or the prices tend to spike, broadly, it is beneficial for us.
Since we're talking about margins, Mr. Asthana, one of the triggers or levers have been also the value-added products, right? How's that expected to shape, and what kind of contribution are you expecting from the value-added products going forward?
So value-added products, there are 2 parts to that. One is the products we are looking at premiumization of across the board on all our FMCG businesses. So, for example, whether it's the biscuits or whether it's nutraceuticals or it's the food businesses, we are looking at a premium sort of addition strategy to sort of work towards. And second is the value addition that in the core businesses that we're doing by improving the the brand structures that we have, by improving the better distribution, by coming out with new product development. So that work is afoot, and it is helping us increase our margin profile, because a lot of businesses tend to get commoditized over a period of time. And I think innovating in the kind of offering that we give to the consumers would make a big difference. So that is pretty much working across the board in all the businesses that we have.
Okay, so that point is taken as far as the premiumization as well. But what's your take with respect to how the rural economy is shaping up? First up, if you can help us understand what kind of exposure do you have to the rural markets at the moment, and what's the demand differential like, let's say, in the urban tier 1 cities versus what's happening in rural India?
So in terms of the exposure that we have, as you know, that all FMCG companies have got very large exposure to the rural economy. We saw a big spike in the rural demand, especially during the second quarter and third quarter, when we saw that the harvests happened. There was a wedding season, there was a festive season of Diwali, etc. It has slightly sort of tapered off in last month and a half, but we're expecting that we'll see a big spike again in the rural demand. So that is one part. And so in terms of our portfolio, we've seen, generally stable to improved sort of offtake from the rural markets. Our exposure is pretty much 60-40. So 60 is we have towards the urban areas, and 40 is towards the rural areas. And I'm talking of tier 1, tier 2, and tier 3 cities as urban, and below that in the rural economy. So that is going pretty much afoot. But rural areas, I think it tends to respond a lot to the harvest and the festive season, because there's a bit of sort of change overall. But in general, I think rural, the tough part is behind us. I think we should see a good pickup in the rural demand as well.
Okay, and Mr. Asthana, if I have it right, the expectation was that you'll end the year with a net sales of around 30,000 odd crore rupees with an EBITDA margin of 6 to 7%. What kind of growth rate are you expecting in FY24 going forward with respect to margins as well as the top line? Any targets?
So our targets are very clear that we've already stated that in the core business of edible oil, which is commoditized, we'll do better than the country's demand. So country's demand typically in edible oil, we are witnessing between 3 to 4% growth. We are doing between 4 to 6%. And idea is that we should work on high margin businesses, high margin sort of edible oil space. In the FMCG businesses, our target is to maintain 15% growth rate that we are pretty much committed to. In terms of the revenue numbers, I think, it would be wrong to give a sort of a number right away. But the number that you stated and what we originally mentioned, we should be pretty much on course for that.
Okay, Mr. Asthana, we'll let you go on that note. Thank you so much for joining and speaking to ET Now this morning. But